Welcome to Shadow of Truth, and today is Thursday, September the 3rd, 2015, and we have the distinct honor and pleasure of welcoming back one of our favorite guests, and that is Mr. Alasdair Macleod from goldmoney.com and economicsandfinance.org. How are you doing today, Alasdair?
Absolutely fine. Thank you, Rory, and it's nice to be with you.
We're glad you're here. And I wanted to start out. We had interviewed Mr. Craig Hemke a couple of days ago, and he had gone back and looked at a 25-year chart of the S&P and shown these three different tops where there was about a 6 to 8 month span where everything just topped out, and then there was what he called the death candle, and everything kind of fell off a cliff from there. And that's exactly where we're at today. And he demonstrates that in this chart. It's really a nice chart that he did. The reason that I'm bringing that up is because this morning over on Zero Hedge, there was an article and Case Shiller comes out and says that he sees the Dow down to 11,000. And Craig Hemke over at TF Metals Report on Tuesday was saying that what this 25-year chart was showing him was about somewhere between a 50 and 55% correction, which is what's happened in the last 25 years on two different occasions. And like I said, that's where his chart is showing we are currently. And what do you see happening as far as all the volatility, everything that's been happening over the past 6 to 8 months? What do you see happening over the course of the next, the rest of the year?
I think a similar story, really, to the one you've portrayed. I think that there are two forms of analysis you can do on this. One is technical analysis, obviously, which you were referring to in the case of Craig. And I think if I can just add to that, my Elliott wave analysis would tell me that the long-term cyclical top actually was the dot-com boom in 2000. If you look at the emotion that was in the market at the time, it was a bubble on the same sort of scale as the South Sea bubble in 1715. Now, the reason I say that is that there is a historical record. A chap called Mackay wrote a book about bubbles, and in one chapter he covered the South Sea bubble. And companies were being floated with prospectuses. It was sort of on the lines of, this company is being floated to do something which is, which you will not be told. I mean, I haven't got the exact phrase, but it was something like that. In other words, give us your money and we'll do something with it and we'll make a lot of money for ourselves, sort of thing. And people were buying into it. In the same way as they were buying into the dot-com boom. So, to my mind, there is a parallel, if you like, between the South Sea bubble and the year 2000. In Elliott wave terms, what we've had since then is we had an A leg, which was that halving of the market in 2002-3. You had the cut in interest rates, which rescued the market. You had a sort of an initial rally, which took you up to 2007. Then you had a rundown after the Lehman crisis, which again was a halving of the market. And this is the final leg of what the technical analysts, the Elliott wave people, would call a B leg. Now, the B leg basically is a real sucker. It sucks everybody in. Anybody who really hasn't got any experience or hasn't got good experience of markets, long-standing experience of markets, understanding valuations in markets. Those are the people who get sucked in. And that broadly is, I think, what we have seen happening progressively over the last 3 years as people have bought the Fed's put. The Fed is saying it's going to go up. They're keeping interest rates down so that markets can go up. Therefore, they're going to go up. Therefore, I shall buy it. That is the logic. Now, that logic comes to an end. And I think what we have seen recently is the cracks appearing in that argument. So in Elliott wave terms, we've now got that C leg. Now, the C leg we can expect to take us back at least to the bottom that we saw after the Lehman crisis, and more likely it could overshoot that by a reasonable degree. So this is a very, very bearish technical prognostication. I should say for listeners that there are other means of technical analysis, and technical analysts, like economists, don't agree. You get a variety of views. But I'm putting forward one view from a technical analysis point of view. When I look at the fundamentals of the market, again, I see the situation is not all that good. I'm interested that we have such an overload of debt that the Fed is now trapped. The Fed has to print money simply to keep government afloat, because government has welfare commitments which are escalating all the time. And commercial banks have over-indebted customers, and they cannot afford to have asset prices fall. So you've got a situation really where it's becoming more and more apparent to players in the market that not only is the Fed trapped, but they're trapped into an outcome that is likely to be extremely unpleasant. And as that realization dawns, I think the valuation for equities is likely to be impacted negatively. So I think those are the two ends that I'm looking at. And I know that lots of us running around saying, oh, it's gloom and doom and all the rest of it. But I really do think this time, and this incidentally, going back to the Elliott wave analysis, when you see a genuine top, all the old hands say, well, this is absolutely crazy, but they throw in the towel and they buy at the top along with everybody else. I mean, that is a bubble. But when you get a situation such as we've had recently, you do get a fairly strong body of expert opinion that is really very, very cautious about the outlook for the market. And that basically is what I've seen. And I think that's consistent with that sort of secondary rally, if you like, the end of the B leg, as the technical analysts, the Elliott wave analysts would call it, which precedes a rather nasty C leg, which, as I say, will take us down to the lows that we saw post-Lehman, and I think will probably overshoot that level by a reasonable degree. So the outlook, I don't think, is good, even though we do have a number of gloomsters and doomsters like me running around saying it's not all that nice. I don't know what Dave thinks. You might throw a slightly different light on it.
I think you're a doom and gloomer, Alasdair.
No, I'm cheerful. I mean, I haven't bought the market, so I don't mind it going down. No. It is actually quite a problem, because you have an investment management industry which has grown up to, if you like, market investment to the great unwashed, the people who don't understand investment, people who shouldn't actually really be in markets. And the result is that the wrong people are going to get trapped in this. And I do feel for them. I feel for them in the sense that I think that they've been rather led like lambs into the slaughter, and they know things are not right. They know things are not quite right. But when your stockbroker or your investment advisor gets on and says, I think you should buy this mutual fund, that mutual fund, what can they do? They're not the experts. They pay the investment advisor to advise them. And if the investment advisor says you should buy, and they all do, they haven't got a clue what they're talking about. But, the three of us will understand that. But, if you're just an ordinary person, not skilled, with no understanding of investments, and you appoint someone to help you through this morass, you expect them to know what they're talking about. Unfortunately, they don't. The whole thing is really the most appalling lottery, and people are going to lose a lot of money, and that I do regret.
Alasdair, you put out a piece last week called "Economics of a Crash." And
yes,
I thought it was a phenomenal article. But first of all, I just wanted to say, because I've been reading your work for, I don't know, at least 10 years, since way before you teamed up with James Turk, and I've always thought you are a phenomenally skilled writer, which is a rare commodity these days. Roy and I were talking about that before we brought you online. But at any rate, you had a section in there, The Inevitable Conclusion, where you say, The equity markets are telling us that the debt crisis is now upon us again. The detailed course that events will take from here cannot be predicted, but we can be certain that over the coming months, governments will be ready to move heaven and earth to prevent a deepening crisis by any means at their disposal. Now, I assume you mean, we're not going to see an interest rate hike in 2 weeks, or probably even in December. I think sort of what's hidden in there is that you're expecting QE for one of these days. Do you want to sort of expound upon that?
Yes. Your reading of what I'm saying is absolutely right. I don't see a rise in interest rates. I think what we have seen from the Fed is a ghastly realization that they are trapped, and they're desperate to find a way out of this zero bound. And the slightest economic recovery, they sort of think, well, perhaps we can edge interest rates up a bit. But that's not happening. The recovery isn't there. The result is that they cannot raise interest rates. I think the IMF came out today and said, there is is it a G10 meeting or something? There's a meeting coming up, finance ministers and all that sort of stuff.
One of the Gs.
Yeah, we have so many of them, and they're all.
This is called the G-Spot meeting.
The G-Spot. All right, we'll call it the G-Spot meeting. It'll make someone happy, but it won't make us happy. But you cannot raise interest rates at a time when you have credit implosions going on around the world. I mean, you haven't got a credit implosion in America. We haven't got one in Europe. We haven't got one in Japan. But everywhere else, it's actually looking pretty awful. And that is going to impact, I think, certainly Europe, certainly America, and certainly Japan. So the best you can say is, well, we can't put up interest rates at the moment. We'll just have to sit on our fingers and pray. And I think that's basically where the Fed is. So I think we can rule out a rise in interest rates. And we can also rule it out from another point of view, and that is, when we talk about raising interest rates, we're talking about the Fed funds rate, which is what banks get paid on their excess reserves which they hold at the Fed. Now, at 0.25%, if they've got 2.6 trillion sitting on the Fed, unemployed in the markets, as it were, then and the Fed raises rates, what's likely to happen? You're going to get a contraction of bank credit. I think that's pretty certain, and that is not what the Fed desires. So I cannot see the circumstances whereby the Fed will actually raise interest rates. The second point you raised was about QE4. What we have to have, whether you sort of call it quantitative easing or just market operations or whatever, is you have to have a continually expanding quantity of money feeding into the economy to stop a crisis happening, because everybody is so heavily indebted. They're rolling up interest, and not only are they rolling up interest, they're rolling up their debt, and they're adding to it all the time. I mean, I'm talking about government in particular, and some very, very important customers of the commercial banking system. If you stop printing money one way or the other, whether it's money or credit, or whether you do it through QE or any other means, then you're going to invite a crunch, if you like, a credit crunch. And the Fed is perfectly aware of that. They've got to continue expanding the quantity of money. So we're going to see that. And I suspect that if the market starts getting worried about the rate at which money is expanding, in other words, fears of deflation start hitting the headlines, then I think you will. There's a fair bet that the Fed will come up with a QE4, if you like, to appease the markets as much as anything, because they can feed money into the system without quantitative easing. They do that all the time anyway. Quantitative easing, if you like, is a sort of rather public way of doing it. So in terms of expanding money, yes, they're doing it, and they will continue to do it. And incidentally, if we see any sign of the expansion of money contracting, then I think the Fed starts hitting the panic buttons.
Let me just circle back to something you had referenced, which is that we're seeing global credit implosions everywhere except Japan, the United States, and Europe. And you mentioned the 2.6 trillion in excess reserves sitting at the Fed, which that was, I mean, what we're calling quantitative easing is really money printing.
That's correct.
And that's printed money that the Fed basically deposited into the bank balance sheets, and it's sitting in the excess reserves account. I think a big part of the reason for it there is it's being used as derivatives collateral. But we also have these snake oil salesmen from Wall Street coming onto financial media saying, well, the Fed eventually has to normalize its balance sheet, which I guess that's sort of the preferred way of referencing unwind QE. What do you think would happen in this country if the Fed were to start pulling that $2.6 trillion off the bank balance sheets and just sending the money to the incinerator?
They can't do that. Basically, the excess reserves is the property of the bank, of the commercial banks. It's just it's not in circulation, and I think that all they can do is encourage the commercial banks to take the money off their balance sheet and deploy it somehow. I mean, there are ways in which they do this through repos and reverse repos and all that sort of stuff. But basically, they've got to persuade the banks, look, instead of letting the money lie idle here, go and use it. And I think that broadly, the only way that can normally be done is to lower the rate of interest which you pay on those excess reserves. But I mean, they're only 0.25%, for goodness sakes. So there is no room for the Fed to move on this. And this is why they are stuck at the zero bound. And they've suddenly realized, they've used all their ammunition. We ain't getting economic recovery. I mean, unless you believe the government figures, which, frankly, I take with a pinch of salt. So what the hell do you do? They really do have an enormous problem. And, okay, it's a problem of their own making. I mean, I think, Dave, you and I certainly, I don't know about Rory, we certainly... if we had a position of responsibility, I like to think we wouldn't have got ourselves quite into this position. But we are where we are, and the Fed don't actually have an awful lot of room for manoeuvre, other than keep their fingers crossed and hope something turns up, which is roughly what they're doing.
For the record, I wouldn't allow myself to get even close to this.
Well,
in any way.
Yes, I know. I sympathise with that. Yeah, but you know what I mean.
You referenced the IMF making a statement earlier today. Haven't they come out and said that the central banks around the world, haven't they said on a couple of different occasions that they're actually out of bullets and that they don't know what's going to happen, how they're going to handle the upcoming crisis?
Absolutely. I mean, anyone if in a position of government authority, I call it government authority, central bank authority, IMF, World Bank, it doesn't matter. All those guys at the top do have a problem. They recognize they've got a problem and they just don't know how to get out of it. It's a huge problem. They're now in the situation, really, where they're sort of wishing for a bit of inflation for the simple reason that the only way they can think of lightening the debt burden is to devalue it. But, that's not a process which you can control. If you start pushing up inflation, let's assume that you're successful in doing that, then the idea that you can sort of push inflation up to 2% and it's going to stop there, I mean, you got no control over it. It is as simple as that. So there is no exit from this problem, and I certainly can't see any exit. I mean, I'm all ears for someone who comes up with something sensible and viable. But so far, I can't think of anyone who has got an answer to this, and I don't think there is an answer, unfortunately. I mean, the next thing that is bound to happen is that you will get a developing crisis of some sort. I mean, if we're right, as we have discussed, and that is that equity markets fall, then that is going to be a source of huge concern, I think, to the central banks, which is why, incidentally, that they will try and step in and prevent it. I mean, as we've seen China is doing. I think you'll find that the sort of fairly public interventions will start appearing. I mean, we already see it in Japan with their QE, but I suspect also that the Fed and the Exchange Stabilization Fund will step up to the plate a bit more obviously. I don't know about the Bank of England. I think they're likely to have a problem. I can see Mr. Draghi with his new toy called the euro doing various things. But other than that, there's really nothing they can do. And I think a fall in equity markets is going to present the central banks with a new crisis. And it won't be just because, bank collateral's falling and all the rest of it. They will put it that, confidence is disappearing, and that's something we've got to manage. We've got to restore confidence. They will do what they can to reflate their way out of the next crisis. And what we're looking at the moment is we're staring down the barrels of a potential crisis with markets having entered a bear market, if you like, on any technical description.
Alasdair, I really only have one more question, and you've been really generous with your time, and we appreciate it. I think what's sort of in the back of a lot of people's minds, and this sort of follows on one of your final paragraphs in your article, the hyperinflation of fiat money and the prospect of a final collapse in its purchasing power is becoming an increasingly probable outcome of the financial events unfolding today. That much can be deduced from sound economic theory and is confirmed by historical records of similar crises. I think a lot of people are sitting back here saying, well, why can't the Fed just start printing money and buy the whole stock market in order to prevent the stock market collapse that you see, that we sort of all see coming?
Well, undoubtedly, they will either do that or do a variation of that. But on the other side of the deal is all the money that's pushed into the system, and if you overload the system with brand new money, then you are going to generate inflation, price inflation. By which what I mean is that, first of all, you will see that extra demand from that money begin to drive up prices. And as prices start to rise, people will then change their preferences away from money towards goods. In other words, what people will say to themselves is, hold on a minute, we're now seeing the price of bread, the price of butter, the price of toilet rolls going up. I think we better buy some for the household before they go up much more. So what you get, if you like, is that shift of preference away from holding cash into holding goods. At the extreme, when everybody's doing that, you get a collapse in the purchasing power of the currency and an acceleration into hyperinflation of prices. A lot of the time, in fact, most of the time, you're sort of somewhere in the middle, and it is the job of a central bank, if the central bank does have a job, to prevent that sort of gentle inflation turning into something really destructive. And that is what Volcker did back in 1979, 1981. So, we're not there yet. But what I find difficult to see is that when we get to that point, and incidentally, we are on course to move in that direction, unless there is something comes along. When we get to that point, I cannot see how we have the option of a Volcker coming in and saying, don't care about the short-term damage. The first thing we've got to do is to kill this inflation. So I will jack up interest rates to 20%. Bang. You're not going to get that now. You cannot get that now because everybody would go bust, including the government itself. We are so indebted, so much more indebted than we were in 1979 when we had that ghastly inflation, which was turning into hyperinflation and would have turned into hyperinflation if Volcker hadn't acted. This time, I cannot see where the solution is going to come from, because to raise interest rates to kill price inflation is going to be so economically destructive, politicians are elected to keep the thing show on the road. Central bankers basically are beholden to the politicians. I know they claim that they're independent, but they're not. They're beholden to the politicians, and they're not going to be blamed for bankrupting the government. So where do we go with this? It's very difficult to see how we can get out of it.
I don't see any exit whatsoever. Same as you. I mean, it doesn't make any sense. I mean, because not only are the governments up to their eyebrows in debt, so are the citizens around the world. The citizens are just as in debt as the governments are.
Yes, everybody is. That is absolutely right. I mean, it is not beyond the bounds of possibility they can kick the can down the road one more time and buy us another few years. That's not beyond the bounds of possibility. But I'm finding, it just gets harder and harder to do that every time they do it.
If they do that, though, Alasdair, isn't that going to be a signal to the Eastern world, primarily Russia and China and some of the other creditor nations, to that something is very wrong, and we need to get out of the way of this and start dumping treasuries and ramping up in other areas of currencies, as far as global currencies or whatever. I mean, wouldn't that be a signal to them to do that?
Well, I think they've already made that analysis, Rory. I know it doesn't appear that they've directly done that. I mean, the press have tied in the selling of U.S. Treasuries by China as their panic to deal with an imploding credit bubble and to prop up their currency. I'm sure there is something in that, but equally, I think the Chinese, want to divest themselves completely of the dollar. We had this week something came out of Russia to the effect that the Russians intend to do away with any use of the dollar whatsoever, and they have set up this sort of mini market, as it were, between Russia and Kazakhstan, Uzbekistan, Tajikistan, and Uncle Tom Cobley and all the other stans. The basis on which these countries are dealing is in their own national currencies, cross-border. They're not using the dollar at all. The dollar is almost sort of banned for that sort of trade.
It has been.
And that's going to spread throughout Asia. So, and this changes the whole situation. The days when the dollar was the reserve currency and nobody would argue against it, those days, I'm afraid, are gone.
Yeah, Dave and I were talking about that just a few days ago, as far as these smaller countries, all these stand countries, Belarus, and that are beholden to Russia in particular, that they don't have to make an announcement that they're not going to use the dollar anymore, but they have, and their economies, yes, they are small, but when you start looking at them collectively, now you got something, which is exactly what's happening.
Yes, I take your point, and I would reinforce it by looking at it another way. If you look at the Shanghai Cooperation Organization,
exactly,
as it is today and as it is expected to be expanded, you're talking more than half the world's population, and this is the half of the world's population that is getting richer, while the other half, us lot, are actually getting poorer. So it's the power is shifting, the economic power is shifting, and it's a major, major shift, which nobody in the West really seems to be noticing.
They don't seem to care.
Well, I think to an extent, what people do is that, they have sort of prejudices. They would rather a problem would go away. They would rather not consider what we've just said. So they will sort of dismiss it, and of course, the mainstream media, which responds to basically what people want to hear or what they might be interested in most of the time, they've got no interest in talking about what's going on in the big picture. And I think the sort of these big geostrategic shifts are something which historians will write about, but at the time, the vast majority of people don't notice what's going on. They don't understand what's going on. They don't want to understand what's going on. They don't want to understand that the welfare state system is fundamentally bankrupt, and the system that is replacing it is a sort of mercantilist Asian system run by a few guys at the top with the sort of, I suppose, some vague trappings of democracy, but actually in practice they have got ultimate power, and they're running it rather like their personal fiefdoms. It's a lot more successful than our rather broken system, I'm afraid.
Unfortunately. Yeah, the West is in the business of war, which is what the United States and Europe, that's their business. And the East, being China, Russia, India, all the stand countries, they're in the business of business. And whether we like it or not, that's what's happening. War is not on the agenda, in my opinion, of Russia or China. They're doing everything within their power to avert it, even though the West and their warmongers keep trying to push and push and push and push for a war that they desperately need as a distraction. I don't think that they're going to play ball. I mean, they may have to. They may be forced into it, but that's just what I think.
I think what you're saying was actually very evident over Syria.
Exactly.
We were absolutely determined. I mean, America and the UK were determined to go in there. I mean, having destabilized Syria, softened them up, as it were, with a bit of sort of sparring and supporting a few nasty people to undermine the status quo, we were then going to go in and clean the thing up. Fortunately, the UK Parliament turned round and told David Cameron no. After the experience of Iraq, that this country was in no mood at all for that sort of venture. And the result today is that we've got Syrians and Iraqis flooding out of that part of the world, trying to get into Europe. We have got the most enormous human catastrophe going on in Europe, with all these migrants trying to find somewhere where they can actually live without being shot at and actually sort of settle down with their families. It is a direct result, if you like, of the failure of the West policies over that part of the world. We're paying for it. Well, it's not us that's paying for it, it's the poor refugees that are paying for it.
Yep. Well,
let them eat cake, Alasdair.
Well, if there is any, Dave.
If there is any. Oh my goodness!
I think most people in this country aren't even aware that that's going on. And I read an article yesterday about it, and I saw some news footage this morning, and I mean, it's horrifying.
It is, and it's just sort of beyond words. I mean, I think this is the largest immigration flood that Europe has ever seen, and I don't know how we deal with it. I really don't. The economist in me is actually, it's got a very sort of simple view on this. These guys have got off their butts and they have gone to try and seek a better life. They have, in the process, shown that they are more entrepreneurial than the indigenous European, and therefore would make a major contribution to the European economy. I mean, we saw this with the Ugandan nations who were kicked out by Idi Amin back in the 70s. They are now the wealthiest community, ethnic community in the UK. Would you believe? All through hard graft. I see exactly the same situation with all these immigrants. They have got the same, if you like, ethos. If they've sort of risked their lives to get as far as they have, this shows an enormous determination. All right, driven by fear to an extent, but I can tell you this is something which, in economic terms, is extremely valuable. Whether we can actually benefit from it comes down to politics, and I think the politics says no, and it says no basically because we are welfare states. We all contribute into the welfare state. These people are now coming in and will not have contributed to the welfare state, but under the rules of the welfare state, they will be entitled to draw on it. And that, if you like, is a fundamental difference between what goes on today, and we talk about welcoming immigrants, compared with history. I mean, we had Huguenots, we've had Jews, we've had all sorts of people come into this country since the Reformation, and they've integrated extremely well. So, what we're seeing now is not new, other than the effect on the welfare state. And I think that is a political problem which nobody's really prepared to face up to. And I think there is also a small subset on that, which nobody will talk about, and that is there's one thing to have, sort of French and German and various other refugees coming in from Europe into the UK, but, when they're a completely different culture, Muslim, and maybe not quite white, that is another issue, which, of course, nobody will talk about, but I think is there in the background. And the other suspicion we have in all this is that we do know that ISIS are likely to seed the immigrants with their own soldiers, as it were, foot soldiers, who will come over and disrupt life with suicide bombs and all the rest of it. So, this is not an easy situation from whichever way you look at it.
No, it is not.
Well, history's method of dealing with population problems, Alasdair. Start a world war.
Well, yeah, but we've now got nuclear weapons, and I like to think that while we might sort of do a certain amount of brinkmanship, it never quite comes to that.
Yeah, Cormac McCarthy thought the same thing, which is what led him to write The Road.
I hope you're right there, Alasdair, that there is some,
anyway, I
cooler
think
heads prevail.
Yeah, all we can deal with, I think, is trying to protect our money as much as possible. Right. Try and understand what's going on so that we can protect our money. The politics, I think, is way beyond us as individuals. If you've got governments who are sort of out of control, there's nothing we can do about it, I'm afraid.
I agree with that 100%.
Well, Alasdair, we certainly appreciate all your time today, and not going to take up any more of it. And this has been great. Love talking with you, and hopefully we can do this again in the not too distant future. And you can find all of Alasdair Macleod's work over at goldmoney.com and financeandeconomics.org. Alasdair, is there anything you would like to leave the audience with?
I think I've probably given them enough bad news for one go, really.
Well, all right. Well, at least we all got a good laugh.
So, I think, I don't know. Well, what can I say? I can wish them a Merry September or something. I don't know. We just have to sort of. You got to be cheerful about something.
Be cheerful about something. Dave, you got anything?
Well, the NFL football season starts in a week, so I'm cheerful about that.
Oh yeah, we also we beat the Australians. We won the Ashes series, which for American listeners basically is cricket. So I know you don't understand it, but it's big over here.
Well, all righty. Well, I guess we will just talk with you soon, and it's been a pleasure speaking with you, Alasdair.
Thanks for your time, Alasdair.
No, thank you both very much indeed. It's been my pleasure.